So, having understood what is tangible real accounts, we are coming to the intangible real accounts. Right now, we'll not dwell upon it. We'll look to this topic a little later. For the time being, what is a real account? A real account is an account which you can see and touch. Such accounts are real. What are the examples of real account? You have cash account, good account, and asset account. Okay. Assets are nothing but properties of the business, and like examples are land, building, machinery, and furniture. Land, can you see land? Yes. Can you touch it? Yes. So it's a real account. Building, can you see a building? Yes. Can you touch a building? Yes. So this account is representing building. Building can be seen and touched, therefore building is a real account. Machinery, like a computer, can you see the computer? Yes. Can you touch the computer? Yes. So this account is representing machinery. Machinery is which you can see and touch. It is real. Therefore, it's a real account. Furniture account. Can you see furniture? Yes. Can you touch furniture? Yes. So this account is representing furniture which you can see and touch. Therefore, furniture is real. Therefore, furniture account is a real account. And intangible real accounts we look at a little later when time comes. Let us not complicate things right now. And finally, we come to the third type, that is nominal account. Nominal account. If an account is representing all expenses and losses and all income and gains, such accounts are called as nominal accounts. So if you look at, if this is an expense, this is an income, opposite, if this is a loss, this is a gain. So any account which represents an expense or a loss, or any account which represents an income or a gain, all such accounts which represent expense, losses, incomes and gains, all such accounts are called as real accounts. All such accounts are called as real accounts. Now let us understand it with the help of an example. Now take a business. The business is paying salary account. The business needs to pay salary to its employee. The business is paying salary. Amount paid is an expense, right? So this account is a salary, is equal to salary. Salary is an expense, therefore salary account is a nominal account. Then the business is in a premises for which they are paying rent to the landlord. So rent account. So this account is representing rent, and rent is being paid by the business owner. Any amount that is paid is called as an expense. So rent is an expense, therefore rent account is a nominal account. So businessman borrows loans. Businessman borrows loans, and on this loans he needs to pay interest. So we have interest paid on loans. So interest paid account. This account is representing interest paid. So it is an expense. Therefore, interest paid account is a nominal account. So these are the examples of expenses. Okay, now we'll go to income. So here we have rent. Suppose if it is rent received account. So this account is representing rent received. Rent received is an income. Therefore, rent received account is a nominal account. Here it is interest paid. Then we have here is interest received account. So this account is representing interest received. Interest received is an income. Therefore, interest received account is a nominal account. Now the question comes, sir, why will the business receive interest? The business has a lot of money. All the money I take and I keep it in the bank. Suppose I keep it in a fixed deposit. Then the bank will pay us interest. So we will receive interest from the bank. Who is receiving? The business is receiving interest from the bank. Once we receive money from the bank, then interest received is what we are receiving it. Therefore, it's an income. So, and all incomes are what? All incomes are nominal account. Therefore, interest receipt account is a nominal account. So, with this we finish what are the three types of accounts. So, let us recall. We said accounts are of three types: personal account, real account, and nominal account. Personal account is the account which represents a person. Persons are of two types: natural person and artificial person. Natural person means all individuals, artificial person means all businesses. Natural person, one, Rama account, Sita account, Krishna account, Radha account. Then artificial person, that is business. We have SBI account, More supermarket account, and we have Care hospital account. So with this we finish the personal account. Next we are going for real account. Real account is an account which you can see and touch. There are only three real accounts. One is cash account, good account, and asset account. Now, what do you mean by an asset? Asset means property of the business, like land account, building account, machinery account, furniture account, etc. With that, we come to the last type of account, that is a nominal account. Nominal account. Nominal account is an account which represents all expenses and losses and all incomes and gains. Example of expense. Expense is nothing but amount paid. So salary account, rent account, interest paid account. Now we come to examples for incomes and gains. Here we have rent paid, so here it will be rent received. Here we have interest paid, so here it will be interest received. So if an account is representing either income or expense or loss or gain, such accounts are called. So we said if an account is representing income or expense or a loss or gain, such accounts are called as nominal. Such accounts are called as nominal accounts. Now finally we are looking at the third point, that is what are the principles of account, or what are the rules. What are the rules? These are like the formulas. These are like formulas in accounts which help us in drawing out solution for all the problems. So these are like formulas, so these are principles or rules. So we'll see first what is the rule for a personal account. Personal account. Now whenever you talk about account, we said account is a statement in which we record all business transactions. It has two sides. What are the two sides? It is the debit side and the credit side. It has the debit side and the credit side. So what is the principle for a personal account? Debit the receiver and credit the giver. That's that is the first rule of debit and credit for a personal account. A person can either receive or a person can either give. So the rule is for personal account is debit the receiver, credit the giver. Next we have real account. Again we are talking about an account. So account, we are talking about an account. So account has two sides, the left hand side and right hand side. That is, left hand side is the debit side, right hand side is the credit side. So these are the principles or the rules of debit and credit. So what is the rule here, or what is the principle here for real account? Debit what comes in, credit what goes out. So the rule or principle for real account is debit what comes in, credit what goes out. And finally we have nominal account. Again we are talking about, we are talking about account, and we are talking about account. We said account has two sides, the left hand side and the right hand side. The left hand side is called debit side, denoted by DR. The right hand side is called credit side, denoted by CR. Now what is the rule for nominal account? Debit all expenses and losses, credit all income and gains. So this is the rule or principle for nominal account. These are the formulas which enable you to draw out solutions for problems in all the chapters in accounts. So your entire accounts is based on these three simple formulas. So what is the formula for personal account? Debit the receiver, credit the giver. For personal account, what is the formula? Debit the receiver, credit the giver. For real account, what is the formula, or what is the rule, or what is the principle? It is debit what comes in, credit what goes out. Because you take, what are the examples of real account? I said cash, good and asset. Cash can come in, cash can go out. Goods can come in, goods can go out. Asset, when you buy a car, asset is coming in. When you sell a car because you want because it got old, then asset is going out. So that is what is the rule or a formula for the real account. And apart from that, finally we have nominal account. Debit all expenses and losses, credit all incomes and gains. Apart from this, we have one modern rule. The modern rule for account, it says that debit all expenses and assets, credit all income and liability. This rule we will use it later in the fourth rule, because this also will help us for initially when we are doing the basics of accounts, journal and all that. We'll initially focus on these three rules for personal account, real account and nominal account. So with this we come to the end of today's chapter, that is introduction to account. So in this we saw what is an account, we saw it yesterday. We saw what are the types of accounts, personal, real and nominal account, and we saw what are the principles of account. The principles of debit and credit. Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. I hope it is easy, and thank you.